What's up, guys? Welcome to this episode of Unemployable. Today, we talked about two principal topics. Number one, we kicked off talking about alternative property investments outside of Australia. So we did a deep dive into investing in Bali real estate. We also unpacked a really interesting property strategy of investing in properties in Dubai and how in Dubai interest is actually illegal and how you can actually use developers' money to own assets that cash flow. Very, very interesting discussion. The second thing we talked about is Bitcoin and cryptocurrency. We know that we are poised. If you read anything on crypto right now for a crypto bull run, what you need to know, what you need to be certain of before you go putting any money into this space, the mistakes people make, and why we're super excited about what's coming up in that particular category. I think you'll find this one really interesting. We're joined by Tony, Chris, and Eric in this one. It's a great episode. Enjoy. We'll see you on the other side. What is up, everybody? Welcome to this episode of the Friday podcast. We are joined again in the studio by the boys, Tony, Chris, Eric, and Adam, ready to rock and roll for another Friday sesh. How you doing there, Tony? Big feedback for you last week. First time on the pod as a guest. People loved it. How did you find it?
It was amazing, man. It's always good to chat with people that are on the same wavelength, and to give the value to the audience is phenomenal. So hopefully we do it again today.
I look around the studio today and I got to say, I think I'm doing something right because everyone here is younger than me by a fair way, from all the guys filming to everyone else. And I planned this out on purpose. I feel younger. It inspires me to get fitter when I have people like you come in. Chris, how are you, buddy? What's happening?
Going very well, mate. Very well. It's been a very good few days actually for early bird, and the future looks very, very bright for the end of the year. Big push ahead.
Yeah, we had a big planning session last week with the early bird stakeholders, from our salespeople to Chris and Josh and Eric and I. It was really productive. We'll touch on that on another pod. We got a whole run sheet today. It's going to be very, very interesting. Eric, what's up, mate? How are you?
Very good, mate. Excited to have Tony on again. I just started building a relationship with Tony from the first time he was on the pod, and went out for lunch already. And he's just a good dude, and a lot of good, like he said, very good feedback. He's a natural teacher. And again, good to have Chris on. A little bit of a change from James. I feel bad for trying to pick on Chris like I would James, but I can't wait till I can't wait till he gets back though.
James, yeah.
And let me guess, he'll probably be wearing a linen shirt. Hey.
Yeah, he's out in the country, and taking some downtime. And Mark just got back from New York and his trip over there, so the boys should be back, I think, next week. We'll see how they go. But guys, we've got a full ticket today. Lots and lots going on in the world. Obviously. So much going on. The news cycle is insane at the moment. It's looping so quickly. We've got the election. We've got all this stuff going on. By the time this comes out on Friday, it'll be known, I think, who the new president of the United States is. So that's going to be very interesting to watch. But I wanted to just at the very start here, just to give a quick shout out to something happening on Wednesday the 13th. Which is next Wednesday. If you're watching this, Wednesday, 13th of November, we have a emergency AI briefing happening Wednesday night, 7 p.m. Queensland, 8 p.m. Melbourne, Sydney. And we're doing this because there has been so much change in AI. It is one of those technologies that every single week it is just blowing up and getting better and better and better. Last night, actually, a big thing happened, which was that NVIDIA overtook Apple as the most valuable company on earth, which is crazy. Of course, NVIDIA provides the chips which powers the AI revolution. And I read something really interesting this week, which is that although OpenAI is only 10 months old, they onboarded 1 million users with zero advertising in the first week. Right in the first week, they're at over 200 million users, and 10 months into their journey, they consume 25 times the amount of compute and energy than Google. Think about that for a second. They 25 times the energy consumption of Google, which is maybe the most successful tech startup or Apple in the world prior to that, which is just incredible. So anyway, this webinar is happening at that time. If you are in business, what's going to be different about this webinar, guys, what we're actually going to focus on is the commercial reality of why AI is such an important part, particularly for Australian small business owners. There's a lot of puzzle pieces here that are moving around. I believe we're going to go into an interesting time next year, 2025. There's a lot of pressure in the economy. Interest rates haven't been, that pressure valve has not been released. Small business people are doing it tough out there. And one of the biggest expenses is human beings in businesses. And one of the biggest frustrations is automation, right? And in this country, we're seeing increased legislative bias in favor of employees, which is increasing costs, which is putting ever more pressure on small business owners who employ 43% of the non-government workforce in this country. So small business people can, I think, one of the really touchable saviors for small business people in this country is AI. And so we're going to be talking about the commercials of it on Wednesday night next week. And we're going to unveil for the first time some really brand new builds that we've done with Early Bird of real Australian small businesses. We're actually going to demo them on the call, and they're going to be a lot of fun. So come along if you're interested in this space and you want to make sure that in 2025 you don't become part of the carnage, because if things go south, there's a few things that sort of make me feel next year could be rough. Like, for example, Warren Buffett is sold up even more and is sitting on the highest levels of cash of any private company, or was a public company, any company in history. Right now, Warren Buffett is just creating a massive war chest, which to me kind of says there's something coming. So I think it's really important to be across your costs, leaning into technology to get through next year. So come along. If you want to register, you go to Early Bird, which is EARLI, Early Bird with an I for early, .ai/webinar. So it's earlybird.ai/webinar. So with that said, let's jump into the first topic on the bill today. And this one's interesting. We're going to talk about non-Australian real estate investing. Now, this is a sector that is heating up like crazy. Everybody, I think, knows somebody who's moved to Bali or is buying a villa in Bali or is building a villa in Bali. But it's not just Bali. There's other parts of the world. Eric, I know you had a call this week, one last night and another one recently with investors who are putting a lot of money into the Middle East, into Dubai. There's stunning returns being made. I hear there's a moratorium on development happening soon in Bali, where they're going to be stopping all new developments for 5 years. I don't know if that's factual. Maybe you've got some insights on that. But maybe you could just lead us off with this and talk about the kinds of returns people are getting up there in Bali, why people are moving and buying up there, what's going on, and then let's flesh it out.
Yeah, I think, it's not a secret that investing in real estate in Australia is becoming more and more difficult. It's easy for us to speak about it. People that have been in the actual market for 10, 15, 20 years, right, 30 years like yourself. But the reality is most people will not own their home in Australia, and it's a sad thing. Now, there's so much opportunity outside of Australia though, and I've been doing a lot of research on that because with our project marketing business and the real estate business, we see all different types of people come in and wanting to try and buy properties, and then you put them onto a finance broker and then they realize they actually don't have the serviceability, and they're like, okay, you can afford to buy something for 500 grand. And it's hard to find something half decent for that price in Australia without, going into rural areas which is scary for people as well. And I've been doing a fair bit of research into Bali and Dubai as an example, and I have friends in both of those sectors that actually live there now, multiple friends that have moved from Australia to Dubai, moved from Australia to Bali as an example. And I reached out to a company, and I had a call with them last night actually, and they're doing some amazing things there. And without going too much into the weeds of freehold land and leasehold land and all these things, the reality what they're doing is they're providing people with more affordable options at a higher rate of returns. Now obviously Bali is a little bit like the wild west, right? Like it's they make their own rules, they change the rules very quickly, and it's not like the hierarchy of Australia where you have a piece of paper that says you own this property and you're safe. There it's a little bit different, and where more risk comes more return comes. But the actual dollar value to get into Bali is a lot less than Australia. And what I'm seeing a lot of people doing is people that have been in the real estate market, here as an example, and they've got some money tied up in equity, are refinancing their property here and investing some of it in Bali, and buying, you know, 1-bedroom suites for, you know, $200,000-$300,000 as an example, and getting upwards of, you know, between 15 to 20% return, you know, net return. I'm not talking, you know,
As an investor
as an investor. So if you work out those numbers and you work out, say, 15% on $300,000, that's $45,000 return. And not a lot of people are getting that kind of return. Now, obviously with that, there's a higher level of risk and a lot more due diligence that you need to do. But the reality is the option is actually there.
So what you're saying is they're pulling monies out, and that may be out of their mortgage even at 7 to 8%, and they're making the spread between
Correct.
7 and 8 and the 15%.
Correct.
Net,
Yeah, and some,
or even 20%.
yeah, and some of, yeah, that's what I mean. Some of those returns are even higher depending which areas you're buying into and what types of properties. So I was on a Zoom call last night for an hour with this guy, and I'm like, straight away, I'm like, I'm not calling just as a person that is looking to buy one. I'm like, I know a lot of people, and it was funny because I must have inquired with the Unemployable email, because he then started the conversation saying, oh, I watched a couple of the pods, you know, checked you guys out, and what you're doing is pretty cool. And I said, well, what we're trying to do is change people's lives and for them to become unemployable and kind of live life on their own terms. He goes, that's exactly the reason why I've built the business that I am building, is because I'm an Australian, right? And my family was doing it tough. And they're Instagram influencers to start with, right? From Australia. And then they were traveling the world, staying in 5-star and 6-star hotels for free because they were travel influencers. So when you do that and you build that experience, you start realizing and understanding what people actually want, right? When they go away and staying in these types of resorts. And they're taking basically that ammo and that education that they have and implementing it in some of the resorts and the different areas that they're building in Bali as an example, and now giving the opportunity to others to invest in some of their stuff. So we were talking about a lot of high level things. We went in the weeds in regards to, you know, ownership and whatnot. But 2 things: 1, dollar value to get in, a lot less than your average property in Australia, which is well over $1 million now on the Gold Coast, never mind. And I think well over 1.5 million or so in Sydney for your average property. You know, in Bali, it's a lot less to get in. So if the people, you know, that have 50 grand or 100 grand sitting in a bank account that you really can't do anything with other than buying a bit of Bitcoin, but to actually get into property, you know, you could team up with 2, 3, 4 people and all of a sudden own a little slice of paradise in Bali. And the beauty with that is because it's holiday let. They're getting these returns because they're holiday letting it, right? They're not just permanently renting it. And you can also stay as well. So if you want to go away for a week and it's not going to cost you $3 grand for accommodation for the week, as an example, you're going and staying in your own property as well, and you can go and check it out, touch it, feel it, make sure it's not falling apart, which is quite interesting. So that's one pretty cool opportunity for people that are looking to invest outside of Australia. And then another good mate of mine.
Just on that,
Yes.
before we move into Dubai, they're also seeing phenomenal development returns up there, right? Like people are investing, doing like 2-3 villas and seeing like 30% if you run and manage the investment yourself rather than having that layer of management when you're there. So you're seeing payback periods of like 3 years of owning the asset. I saw these guys, I won't go any more into who they are, but they went from like 0 to like $12 million, I think, of net worth in 4 or 5 years. And they spent 1.6 million on one of their most recent developments that I think paid back in 18 months, fully paid off. And then a net income off it of like $500,000 a year after that for life or
And what's
more.
interesting about them is
Crazy.
because they've got such a big following. And when you're a travel influencer, right, who else do you know? Other travel influencers, right, that then have their own databases. So majority of their bookings are coming direct. And what I'm
Instagram's amazing.
Right. Yeah. Unbelievable. And when I say direct, right, people go, okay, well, what does that mean? On average, an OTA is called an online travel agent, right? On average, you're paying upwards of 15% to these OTAs, Booking.com and Airbnbs and the likes, which is built into the price. But Booking.com is just taken over, right? But when they have that reach like they do, and they have that authority, and they have that trust that they've built, they're getting a lot of direct bookings, which at the end of the day is more money in the investors' pockets. So it's very, very interesting. I've been deep diving into this for a little while now, and we have mutual friends, obviously, that have done multiple projects there and are currently doing projects. We have a coaching client, funny enough, that's building 11 villas there right now. He just got back yesterday, sending me video saying, hey, I'm happy to catch up and let you know what I'm doing. So I guess the decision that people need to make is, do you go, and jump into the fire yourself and work out what the wild, wild west looks like and losing money, right? Because that's what this gentleman told me. He's like, I lost a lot of money at the beginning because you don't know who's who. You're paying third-party people. Next thing you know, they're not building it. You can't get a hold of them. They don't own the company. Like there's a lot
of upside there, but there's also a lot of risk there. Like, as I said, I heard that they are putting a development moratorium in place in Bali because it's out of control. Like that their infrastructure hasn't scaled with their development. And so you see the influencer photos of Bali, and then you get there and it's just like traffic jams of people on scooters, and it's still beautiful. But like, for example, I've got friends there that own land, and if this development moratorium comes in before they can get their approval, well, they've got $1.5 million tied up in this piece of dirt in Bingen, which is an amazing piece of dirt. They won't be able to do anything with it for 5 years. And they have things like, I asked a guy there who's a developer, how tall can you build here? He said, in Bali, you can build as tall as the tallest tree. I was like, that's the policy.
And that's the wild, wild west.
In the area, you can build as tall as the tallest tree. And I was like, oh, that sounds great. It's like in California when you go into the legalized weed stores, you're like, how strong are these gummy bears? And like, just bite a leg. And I'm like, that's not a measurement.
So yeah, it's interesting. So what I'm loving is really starting to build relationships with these type of people. I met another couple when we were over in Europe this summer that have multiple villas in Bali as well. We've become friends. We were just on a Zoom call with my kids. My kids got along with them really, really well. Just again, there were travel influencers, same thing from Europe. And now they're living in Bali, building villas and living the life. When I was on the call with the guy yesterday, I'm like, where are you? He's like, oh, I'm in Spain. I'm in Mallorca. We're here for 3 weeks. And, this guy's building resorts in Bali. So this is the lifestyle that, some of these people are living. And he used to be a chippy.
I think the thing with Bali is I think you're not early at this point going in there. You're coming in late. But if it's of interest to you, like I would recommend for listeners, I'm trying to think, for the listeners, what can you take from this? Going into YouTube, there's so many videos of people who are sharing their villa builds and how much it costs and what the development profit is and all of that. And I think there are some very, very exciting opportunities. If you can build assets that pay off in 3 years and then have a rental income stream and learn and then try and get together a group of people, each of you put in 50, 100 grand, do a little project of 2 villas and where the risk is really mitigated and then scale.
The key they have is demand, right? The world knows about Bali and the world goes to Bali. Australia is a lot different. Our demographic is different. You don't get a lot of people from all over the world coming to holiday in Australia because of it's not in the perfect location, right? It's very hard to get to. It's very far and it's very expensive. You can still get to Bali, and access it quite easy from multiple areas in the world. And what he was saying is there's not really a down season anymore on Bali. It's basically busy all year round now. And and I think what's helped, to be honest as well, is social media, because how many times has your wife sent you the clip, right, of that swing,
I know
the swing over the mountain,
I've
and
seen
it's like
someone fall off that swing.
Yeah, right. No. All these types of things, right?
I would love to own that business. Do you know how much money that would make?
And the thing is there, what you can't, like in Australia, there's so much red tape, right? Like you go to Europe, they've got umbrellas on the beach, they got people serving you food and alcohol, they've got the tunes pumping. That's what they have in Bali. Here, you can't do that. And that's what people actually want.
Still free. I have a
Yeah.
friend who moved there, very good mate, and he sold up here. He's very well off, and he rented a villa up there. I think the first villa he rented was 200 grand a year, and the one he's in now is like 110 or something. But it includes all the staff, and he's having a great time. And he's just like, dude, it's the best thing I ever did. He's still making a shitload of money in his business in Australia, and he's living there like an absolute king. He's coming home because his daughter's got to go back to school. But there's an amazing life to be had.
Yeah,
there.
I mean, it's not for everybody, right? Like, it comes with risk. Not everything is, the grass is greener on the other side all the time. You got to go in with eyes open and do your own due diligence. And that's what I've been doing. I'm not just going in there straight away and going, 15%, 20% returns. Yeah, let me just buy one. I'm literally going through the due diligence.
I think there's a lot of people, man, that are just like super bored with Australia. Like, that are just like, you know what, fuck this, I just need a change. Like, Australia is fantastic, don't get me wrong, but for a young person coming up, I would honestly be exploring this, where you can go up there and have a crack at something with not a lot of money, or pull together investors from people like Eric. Say, look, I'm going to do a little project, I need 50 grand from each of you, let me do one. And then, I think there's real opportunity there to live a really interesting life. Chris?
Yeah, I was going to say as well, like, just the fact that this is even in the realm of mainstream thinking right now is amazing. Like, think back 5, 10, 15 years ago, the thought of owning property or investing in property overseas was only reserved for the people at the very, very top of things. But this is available now for really just everyday mums and dads.
These guys were literally just backpacking.
Yeah.
I mean, they were
Influencers, but I mean, influencers staying for free at properties doesn't pay you. You're staying for free. So it's not like it looks like they're living an extravagant life, I'm sure. But at the end of the day, you still need money to live, right? But what happens is they're very smart, right? What they've used is their experience of that to realize what people want, align themselves with the right people, and now are creating it for the masses, which is amazing, which means they're giving the average punter an opportunity to own a little bit of a slice of that, which he would never had before. And they're taking away a lot of that risk, which is interesting.
So from what you're saying there too, you can essentially earn money from your business in Australia. So earning Australian dollars, live in a far cheaper country, and also invest in there and make money from that too. That's a pretty good deal. And again, earning money online is not that difficult nowadays. I think the key is you have to be unemployable, though. You can't be tied to a job or a location.
The arb there in Bali is that, you look at these places, like we stay at a little resort outside of the main sort of trendy areas up near Tanalot, and it's owned by a gay couple who built it, a French guy and a Singaporean dude, and they've done this beautiful job of it. Really awesome guys, and we stay there all the time, but it's like $1,000 a night Australian. And build cost, like for the room we stay in, would be like, I mean, it's beautiful, but it's Bali costs, like that. The room probably cost 100 grand, maybe 150 grand per room, and they're getting $1,000 a night for it, and it's booked. And they've got 20 of these that are constantly booked, and you're like, these dudes are making 20 grand a day just in the rent of the villas, and then you've got the beautiful restaurant and you spend money there. None of the prices on the rental side are Bali prices. They're all Aussie prices. And it's just, you look at the way they're built there, and the guys come in and they build a little wooden shack, which they live in 7 days a week, full time. And a lot of them are workers from Java. And, there is quite an opportunity for but again, you've got to be careful of the risk. But I mean, for young people today, that I think you need to take a little bit of risk to be going and start. Everyone goes, start a small business. That's fucking risky. Starting a small business, in my opinion, is actually statistically way more risky than investing in Bali property. In my opinion, the stats are overwhelmingly that you're most likely to fail in a small business, right? So, but yet you'll put 20, 30, 40 grand and year or two of your life into that. Tell us quickly, we've got 4 minutes left, on Dubai. What's the high-level strategy in Dubai?
So Dubai, I've had one of my best mates move there a few years ago, very successful entrepreneur here in Australia, and lived in Sydney. He basically outgrew Sydney and had opportunity to do some stuff in the Middle East, moved his whole family, moved a few of his key team members and their family to Dubai. And he's basically like, I don't think I'll ever come back. And he's rung me up about a couple months ago. He goes, Eric, I got an idea, and told me what the idea is. Are you interested? And I'm like, yeah, that sounds pretty interesting, right? and it has to do around real estate and investing. And I actually have a call with him tonight just to get a bit more of an understanding. But in Dubai is interesting. So in Dubai, here when you buy something off the plan, right, is say you buy $1 million property, you got to pay a 10% deposit, which is $100,000. And if that property takes 2 to 3 years to build, it finishes in 2 to 3 years, and you have to come up with the $900,000 and pay it. Majority of those people will go to the bank, get serviceability as an example, and then go and get a loan and pay that off. And then now you've got a loan of, say you had to come up with another 10% at that time. Now you have a loan of say $800,000 and you're renting it out to pay off the debt, and hopefully it goes up in value. In Dubai is a little bit different. In Dubai, the developer funds a lot of this. So you'll go and put a 10 to 20% deposit down up front. The difference is you could buy units in Dubai, not for $1 million, plenty for $1 million in Dubai, but there's also units, 1 bedrooms and, studio apartments and small 2 bedrooms that you can go and buy for 400,000 to 500,000 Aussie, that you can put a 10 or 20% deposit down. But what you do is say, and a lot of the big developments there are big, right? They're
like DMAC and EMAR.
Yeah,
and all
4 or
those.
5 year kind of developments, right? And what they do is you can then pay it. You then pay it off monthly. It's almost like think of it like a forced savings.
1% a month or something.
Yeah, correct. So what happens is, the beauty of that though is, once you can settle the property and still pay the 1% a month. So they'll give you the keys to the property. You haven't paid it in full yet. Say if you paid 60% of it and you still own the property within reason. I'm sure there's documented, this is what we're going through. They're not going to give you the pink slip to the property when you still owe 40%. So there must be something saying that you own a portion, but the developer still owns a portion, and you're paying that off over time. So the beauty of that is you can actually get the keys to the thing. You haven't fully paid for it. You're now collecting rent, right? You're not paying a loan, right? There's no interest because you're just paying these 1% increments.
Because interest is illegal.
Correct.
In Dubai, yeah. So there's no interest. They're actually the developer's financing it to
Yes.
you at 1% of the value of the property.
Yeah.
Not 1% interest. It's 1% of the value of the property that you're paying
that
off
you're
each
paying in
month.
increments.
That's
And
insane.
you're paying off in increments.
And what happens is the rent that you get. So for instance, say you're paying, $2,000 a month or $3,000 a month to pay this thing off over time. And then all of a sudden you rent the thing for $2,000 a month. Well, now you're not forking out the $3,000 anymore. You're forking out $1,000 out of your own pocket because $2,000 of it is paying that off. And then I'm going into detail about body corporate and rates and all this stuff. But tell me somewhere else in the world where you can buy a property, and this is perfect for people that have the $50,000, $100,000, $150,000, and you don't have the serviceability, right? You're making some money, but the banks, the way they service, I know someone that's making, they just told me that they're making 250 grand. I was at the gym and we were talking about this. He goes, I earn $250,000 a year Australian, right? And I rent a place. I have no debt. And I went to the bank to see what I can actually borrow, and I can borrow up to $1.2 million. Like, that's not that much considering you're earning $250,000, right, in income. So the serviceability and the way that they're servicing it and the rates, they put a big buffer in there for protection. Whereas when you go to Dubai, you can get into these properties at a lower price and pay it off over time. That's just another option.
It's an interesting one, because what happens is you pay this deposit and then you're paying this monthly payment until the thing's built. But it's not interest. It's actually you're paying it off.
It's all principal.
So it's all principal. It's 100% principal. Then the developer's got money in it, which you're just paying back using the renter's money. So you might have another 3 years to go on paying the developer back. But at the end of that, you own it freehold, and you've been able to just pay it off along the way, which is kind of interesting, especially when the lower price point. And it's one of those things, again, you start digging into this, you pull on this thread with a little bit of research, and you start reaching out to a few people like Eric, or going online and watching, and just starting to think, guys, there are other places in the world. Like, I'm moving, as you guys know, in March, and I've spent a lot of time looking at alternative investments outside of Australia, and places that are that are different. Like I watched a video this morning on, I look quite a lot at Oman as a place to live. It's quite an interesting place, but it's not for me. But they're so pro-business. Like they have, in Oman, they have a central government-run immigration center where they've got all the representatives for all the ministries, and they have computer set. I mean, it's beautiful, like this stunning showroom. It's like a display place for a property, but they sell property, and there's all this government-approved investment opportunities where they will finance. You can apply for the finance to do them. They've got all the ministry representatives there. So in one day, they can give you the visas, the immigration, the approvals, loans, everything to come to Oman and actually do business. And there's no tax almost. It's just crazy. Like the world's out there competing.
And what they're building is state-of-the-art stuff, right? Like he showed me one development that I didn't actually buy in that one, but a few of his mates bought in it. And each unit has a pool on the balcony. Like you can't do that in Australia. You can't do that in Australia. They even had downstairs, those, what are those exercise bikes?
Assault bikes.
Assault bikes in underwater. So you're basically, you've got water that comes up halfway through your chest and the assault bike, and there's like 50 of them in the water. Like I'm just going, this is mind-boggling stuff. It was 400 grand Aussie for a 1-bedroom suite.
Yeah, do you know what comes up for me around this is just possibility. So the Australian government is making it harder to employ people. It's making it harder to buy property. It's also the market itself is getting harder and harder to get in. Isn't part of being unemployable having the possibility and opportunity to have location freedom? So a lot of guys from the last pod followed me who are like builders and architects, which is quite ironic. What's to stop them listening to this pod, looking into this in Bali, looking into this in Dubai? They know about property. They know how to build things and create things. And you invest in 2 or 3, and then you have that location freedom where you can go there for a few weeks and still have your business running in Australia. Isn't that what it means to be unemployable?
Well, it's guys like you and like Chris that are fueling a lot of this, because you can actually pick up and move. Like Chris, you don't need the office at Southport. In a year when the lease runs up, you could go, you know what, I'm going to be based in Oman where I'm not going to pay any tax, or I'm going to go to Cyprus, or I'm going to go to wherever and run it from there. They would love to have you. Like in Cyprus, as a tech company, you pay 1.5% corporate tax, and then you pay 0 on dividends after that. So like you can literally set up your tech business there, pay 1.5% corporate tax, 0 on the dividends, and you only have to be there 8 weeks a year for tax residency, as long as you're not anywhere else for more than 6 months. So like that's kind of appealing. It's a Mediterranean island. You can ski in the winter. You can go down by the most beautiful beaches in Europe or in Cyprus. So it's kind of interesting. And people like you, Tony, you could relocate anywhere. So, but you guys can go and like, I'm going to just go to Oman for 3 months. I'm going to rent a kick-ass villa. I spoke to a young guy yesterday who sold 8 properties in Sydney, put it all into Bitcoin, and is now just traveling the world. He just says, it's the best thing I've ever did. I have, my life is portable. I can stick a USB stick up my ass with my entire net worth across borders. And he goes, I can't do that with a house in Sydney. He goes, I said, I certainly hope not. But the world is changing, right? The world is changing, and this is the world we're moving into, where being a digital nomad isn't just for hippies with fake businesses anymore. This is for real people like you, Chris, and like you, who've got a proper education business, a proper AI business. This is where the world's changing. And in fact, we had a listener, you might want to tell the story, one of you was telling the story before we started rolling, about we had Brooke on, who teaches, she's an Aussie living in Bali. She teaches women how to become remote salespeople, and these women are making, anywhere from $10,000 to $30,000 a month, working, 3 to 5 days, but only like 4 or 5 hours a day, with appointments being set for them, and they're just selling. And they're based in Bali. She's based in Bali. I think she's doing 20, 30 grand a month in personal sales income without having to run a business. She just sells. We just had a couple who's a listener from the pod who, as a result of listening to that pod, signed up with Brooke and learned how to do remote sale. The whole family they just relocated?
Yeah, so they're there at the moment, checking out property and stuff, and they're both quitting their jobs, and they're checking out schools and everything, and then moving themselves and their 2 kids to Bali to do the exact same thing. I was actually on a Zoom call yesterday with Brooke, and like the glow in her face, she's like, I've done so much. I've been to Dubai. I went to Cancun since we've met. And I'm just like, this is a girl that, that used to be a teacher in Perth, with her husband, just living a regular life, to now you could just see this glow on her face, and now she's changing other people's lives. So
she's got a big community now, right?
Massive
I think she's got like 300 or 400 women in her community. She's just crushed. So it's really interesting for you guys listening out there. Just remember that there are other options in the world, from putting yourself up to your eyeballs in debt in Australia, and it is getting harder and harder here, and there are options out there. And the government, I was in Canberra on the weekend, and I drove around. I was like, wow, there's some beautiful new government buildings here. And I was like, fuck, I know who paid for that. Me. And a bunch of other hardworking people who are the few that actually became successful.
The question I have is, how did you go at that public toilet?
What?
You didn't see that screenshot you put up?
You gotta mention that one.
I gotta mention it.
Please.
I'm in Canberra.
I like how you pretended like you didn't know.
No, I just forgot. So we were in Canberra. We had a little bit of time to kill before we left, and I said, "Why don't we go to the Parliament House?" It was Sunday, and we're like, "We'll go to the cafe there, maybe if it's open, and just see the new Parliament House, right?" And because I've actually never been, I grew up in Canberra, and so I put it on Google Maps, Parliament House, and somebody has put a review of the toilets. The public toilets attached to Parliament House, knowing that so many people would Google.
On the map.
And it's the top review.
It's the top review.
It's not a review, it's on the map.
It's on the map.
Like you satellite image.
You go to Google Maps and you put in Parliament House, and then you see like the public toilets with a review. I did 200 kilograms of crack in this public toilet. It was the best.
He screenshotted it and
I
posted
saw
it.
that on his Instagram. Yeah.
I was like, oh my God, I love people who, like, I saw it when I grew up there. Somebody went around all the stop signs and they put hammer time underwear and said stop. That sort of stuff just makes me laugh. Hey guys, we recently ran a property day where we took people on the road in 2 buses and showed them 12 real estate deals. 4 of them were commercial, and the rest were land subdivision deals around the Gold Coast and southern Brisbane. And this is the workbook. It's a 43-page workbook where we actually show you each and every deal, how much was paid for it, how the development was done, how much money was made, and so much more. And we've decided to give this away to anybody who's interested in this kind of thing. All you need to do is go to unemployable.com.au/2024, 2024. It'll give you an insight into what our coaching clients get when they join us in the program. It'll show you how millions of dollars were created through real estate deals right here in Australia just in the last few years. And you can get it for absolutely free. Go to unemployable.com.au/2024. All right, so anyway, the message being to people, look at these alternatives. YouTube's a phenomenal place. And I've been doing this because as I've said, I'm moving early next year, but I've spent a lot of time researching what is out there, because we get so constricted to this is it. This is the world. You get into the property market, you work your nuts off. But today there are different alternatives. And honestly, like I look at what Brooke does, and I was like, that actually is a really good opportunity. Changing gears, I want to change gears to NVIDIA is kind of part of it, but there's an interesting story at the moment emerging. Well, we're going into a bull run with crypto, and I think everybody knows that, or anybody who's out there who's followed this before. And I wanted to talk about it because we're going to see if it all plays out how everyone's expecting it to play out. Bitcoin's going to probably go on a run. The altcoin market, or the shitcoin market as I call it, will go on a bull run. And as usual, there'll be people that, just get excited with a little bit of education, information, end up getting their asses handed to them. So I just wanted to talk about it quickly. There's a couple of just little stories I wanted to lead in with that are playing out. One was, the MicroStrategy story, which I've told, I think, before, which is basically a publicly traded company in the US who has created an incredible playbook for leveraging into Bitcoin. And so they've basically got their corporate balance sheet as a public company. They're a business intelligence software company. And the reason I'm mentioning it is in 2020, they announced that they had 500 million of cash. They said, we're going to get rid of all our cash and we're going to buy Bitcoin. And then we're going to borrow money from the markets as a public company. They can get money really cheap. And we're going to sell equity in our company, and we're going to issue bonds. And we're going to just put all of that into Bitcoin. And people are like, oh my God, this is like a savage, really aggressive move. Since they've done it, they've become the best performing stock in the S&P in the US. They've outperformed Nvidia. They've outperformed the Magnificent Seven. Since 2020 to today, they've had 1,350% return, which is just bananas. Another company out of Japan called MetaPlanet, earlier this year, I think it was January, announced that we are going to take MicroStrategy's playbook, which the founder of MicroStrategy, Michael Saylor, has published out there to corporate America and said, copy us, right? This is how you do it. MetaPlanet in Japan was a small, publicly traded company. Since they started at the start of this year, they're now the #1 highest growth stock in the Japanese stock market, up over 1,000% in 12 months. Which is just crazy. So I don't want to go into the full strategy here, but if you're interested in it, Google MicroStrategy infinite money glitch on YouTube, and there's a shitload of study about it. But what's interesting is Microsoft are meeting in 4 weeks' time, voting on putting Bitcoin on the Microsoft balance sheet. Now that is actually significant, because if Microsoft puts Bitcoin on their balance sheet, I think you're then going to see the really big. Now, to be fair, MicroStrategy is now a $50 billion company. It's worth more on its own than Coinbase, which is basically a casino for all the shitcoins. So Microsoft, if that vote goes through, I think you're going to see corporate America start going, look, there's only so long before shareholders in public companies are going to look at that MicroStrategy trade, because they've been outperforming Nvidia, are going to go, we need to, because cash goes, I said this at a recent event in Australia, I look back 30 years, the actual inflation rate in Australia, excluding housing, is 4.5% over 30 years. What that looks like is over 30 years, $100 is worth $25.60, and over 100 years, it's worth $1.18. It literally goes to zero. So when you're sitting on cash as a public company, you got to go, sooner or later, we might want to allocate some of our cash into an asset that's growing. Bitcoin over the last 5 years, the CAGR, compound annual growth rate, has been 55%, right? Compounding. So how long can you ignore that trade with your entire balance sheet? So if Microsoft go and put even if it's a tiny bit of their cash reserves, it's a lot of Bitcoin, but it's going to, I think, trigger a cascade of massive companies going, we need to follow suit and get some of our cash, because shareholders are going to demand it. And the biggest shareholder of Microsoft, BlackRock. BlackRock launched the Bitcoin ETFs earlier this year. The most successful ETF launches in history already have 50% of the value of all gold ETFs, which have been around for over 20 years. 50% of value of all the gold ETFs in America, Bitcoin's already reached it in less than a year with BlackRock.
Yeah, this is really interesting, right? Because I was speaking to one of my mentors, and he has one of the fastest growing companies in Australia. And I've got about 300 grand to play with at the moment with equity and cash. So I asked him, what should I do with it? Should I invest in property or should I invest in Bitcoin? And it's funny, my videographer James is filming us right now. He's been bullish on Bitcoin for the last 5 years, puts everything into it, and he's outperformed me and everyone else. So anyway, I'm talking to my mentor. Yeah, absolutely crushing it. So anyway, I'm on it now, and he says, why don't you do both? When I said, I don't have enough money to do both. I'm about to buy my 8th property. Maybe I can get a 9th. And when he said, why don't you invest through your company? And I was like, what do you mean invest through my company? He said, there's a few companies in Australia you can sign on with, and you can actually buy Bitcoin and cryptocurrency through your company and put it on the balance sheet, which you just shared. I think a lot of listeners at home don't realize that's possible. So his game plan, you can use your super or you can use your company, because what we do in our company, we have about 500,000 sitting there in offset accounts, right, for the mortgages. And we're saving 7% a year, but we could be making 55% a year or 30% a year. So anyway, as soon as I find that out, I'm like, holy shit. Now, his strategy is to take 70% of the free cash flow in his business and invest it into Bitcoin. And by 2030, they're actually raising capital using MicroStrategy's strategy. And they want to have 1,000 Bitcoin by 2030. Now, by 2030, Bitcoin could be worth, 200 grand, 250 grand? Who knows, even more. What's the math on that? What's 1,000 times 250 grand? It's a lot of money. Is it $250 million more?
This is where you go to ChatGPT on your phone. You just type this in. If you have 1,000 Bitcoin, Yep.
But the moral of this as well is he framed it like this. It's an impenetrable moat. Now, obviously, Bitcoin will go up and down, but it's most likely not going to go to zero. I'm not an expert on this, not financial advice. But his whole frame on it is, instead of keeping your money in the bank account, which most business owners do, that safety net, Bitcoin's pretty liquid. Build an impenetrable moat around your business. And it blew my mind. And I was so close to just pulling the trigger and buying 250 grand of Bitcoin.
I think there's an important point here, right, for people, right? So Bitcoin, it's great when you hear 55% compound annual growth rate, but it is not a straight line. It is extremely volatile, which is why the returns are high. So aggressive investors love volatility because volatility, it's like in real estate, risk equals return. So if you need access to that money, I say to people within 4 years, and you don't ever want to sell at a loss, you shouldn't do that because there's an interesting fact. Anybody who's owned a Bitcoin for 4 years or more has never been underwater in that time frame. But you might sit for 2 years underwater if you buy at the wrong time. And if you need access to the cash, it's a problem. But if you don't need access to the cash, if you can reef the money out, when you do the math, and you compare Bitcoin to real estate, Bitcoin, even real estate with leverage, Bitcoin is better if 55% CAGR is real.
I think,
but the volatility is hard.
I think too, Tony, like you just said, yeah, I was about to spend 250,000 on Bitcoin, but I
pumped the brakes.
I pumped the brakes.
Yeah.
And then I see someone like Adam who has, a large amount of Bitcoin. I've got some Bitcoin, but he has a larger amount of Bitcoin as an example. And the peaks and the troughs that he has gone through. And I just relate it back to one thing, right? All he will have is more education on the topic than you. So that's why he is the conviction that someone like Adam has, right? And the emotional intelligence that he will have around those peaks and troughs. He's got a long-term vision, right? And that's one of the things, same with me, right? Like property for me, I've got so much education around property. I've been in it for so long. For me, there's no fear for me around property just because how bullish I am on it and I guess the successes that I've had through it. But again, I've put a lot of time and education in it. I haven't put nowhere near the amount of time and education into Bitcoin. But when I'm surrounding myself with people like Adam and others that are investing heavily and coming up with these different topics and going, hey, check this out, check this YouTube video out. That's the difference is checking that YouTube video out and building your education up, because that will then give you the confidence to go, oh, I'll just throw a lazy 100 in, or I'll throw a lazy 50 in, or I'll throw a lazy $500,000, whatever you have, depending on your wealth. Because I see Adam, and when Bitcoin was, at a shit point in time, which wasn't too long ago,
20 grand,
right?
yeah,
50
US.
to 20 grand, and he's just holding, and now, it's over 100 grand Aussie as an example, and there you go. But like when you look at it today, it's just slumped back down, right? So it's looking at that chart. And one of the things that we were talking about before the pod started is the difference between asset classes like property as an example and something like Bitcoin and shares is whoever owns Bitcoin and whoever owns shares will look at their trading portfolio every day. I look at it every day, sometimes multiple times a day. And then you do a calculation in your mind and you go, okay, that's good. And you move on. And then you look at it again and you go, holy shit, what am I going to do? The difference with property, there's no chart that you can look at that will tell you on a daily basis what your property is worth, right? Because we're using historical data in property. You will then go, the last 6 months, property prices in Australia on average increased by this amount or that amount. If you're on the Gold Coast, right, they don't even talk about the Gold Coast because it's not a capital city. So you just base it off a little bit about Brisbane and go, okay, on average, Brisbane's gone up 5% in the last 6 months as an example. Okay, that means Gold Coast probably has, been close to that. So you don't have that emotional highs and lows, right? And what will happen is if you're not educated and you don't have enough conviction to the investment, what you will do is the croc brain will kick in, your fight or flight will kick in, and that's when you make emotional decisions, which can impact you massively and look back and go, why the hell did I say?
What I've learned through this journey is that, and I heard this from some guys, I was at a Bitcoin conference in Sydney, and these guys onboard high net worth people into Bitcoin around the world actually, and they've got 9 figures of Bitcoin that they've brought into the ecosystem. And they basically said that the best journey into Bitcoin for people is to go buy some like buy whatever it is, $1,000 for yourself or 10,000, whatever it is that you feel comfortable putting in. But because once you actually buy it, then you start paying attention to it. But the important thing is what Eric said, the conviction is what in this game, you have to be able to stay through the troughs, the peaks and troughs. So go to hope.com, which is set up by Michael Saylor, and just start learning. And 100 hours of learning is a basic education and 1,000 is a serious education. And I've not met anybody who has done 1,000 hours and has not come out of it extremely bullish. I've done several thousand hours of it, of Bitcoin. And in short, I don't touch anything else. Now, you guys can do your own thing, but I don't touch any other crypto at all. And Bitcoin, in my mind, is a commodity, not a currency. And there's a whole bunch of reasons why that matters. So we don't have time to dive into the differences today in those things. But if you want to start your journey, my recommendation is, if you're interested in that, is buy a little and then start your education journey.
Yeah, and look at it long term as well. I mean, we've all fallen into the trap in the past of wanting to make quick wins. But like you said, that 4-year period, chucking 250 grand in that just lying around in 4 years, probably not an issue. In 10 years, probably not an issue. But if I'm looking to sell it in the next year and make a quick buck or buy at the dip or whatever, then that's not smart investing. But I didn't know that the last bull run. I put all this money in there and you see it double and you see it triple and you're like, nah, it's not enough. And then you lose it all anyway. So, that was because I wasn't doing Bitcoin. I was doing shit coins, as you would say.
I bought a fair chunk of Bitcoin and Ethereum at the same time in 2021. And I bought it like right at the top.
Yeah.
And I swear to God, the next day, it just kept going down and down and down and down.
The emotions went up.
For a long time, right? But I just held and I held and I held and I held. And I'm way in the green now. But again, it's just the belief, right? And if I'm not surrounding myself with people that know about it so much more than I do, and let me tell you, I've been investigating it a lot more, right? But not 1,000 hours like Adam's put in as an example. But if I'm close to Adam, right, I can ask him questions and his belief will just inspire me to believe even more at my own risk, right? If it goes to zero, I'm not going to blame it on Adam, right? But his belief and his education is so strong and I know how much he has in it, right? Which for most people, it's life-changing money. So I'm like, okay, well, if he has that much belief in it and he's done it, I'll piggyback off that. And that's what will happen. And that's how business works, right? The more you surround yourself with people that are doing things, the more you surround yourself with people that are going, fuck this, I'm moving to Bali, the more people that you surround yourself with that are buying property overseas, the more likely you are to do the same.
There's the quote I heard at the Bitcoin conference that I loved, which was, if you want to know what a man truly believes in, look at what he owns. And that was interesting because there's a lot of advisors and people out there on the internet telling you this, telling you that. Look at their actual portfolio of what they own, because it'll tell you a lot. I made the point last night to the coaching group, here's something to think about. If you look at Bitcoin over 5 years, it compounded at 55% compound annual growth rate for the last 5 years. I personally think on a risk-adjusted basis, now is actually perhaps the best time to buy Bitcoin, because 5 years ago when I was buying, or before that, we didn't have regulatory approval. We had no regulatory framework. Everybody was saying it was, to buy drugs on the internet. But today, all of those things they're gone. The old guard of the SEC in the US are leaving. They're out. Gensler, all those guys are going shortly. If you put $100,000 into Bitcoin today, for example, and it grows at 30% CAGR, right, which is nearly half what it has been growing for the last 5 years, at the end of 10 years, it's worth $1.38 million. Now, and all you need to do is forget that you own it. Just buy it and forget that you own it, right? There's not many places that you could put $100,000 just completely passively like that. And that's if it only grows at half of what it did in the past. If you put that into a small business, you've got to really ask yourself the question, what is the likelihood that I am going to, turn that $100,000 of equity into 14x in 10 years? Statistically, it's very low.
And I think what will happen, and this is what we forget, is it's a generational thing, right? Like if I were to talk to my mom and dad and go, hey, buy Bitcoin, zero interest. They don't want to know about it, right? They're in their mid 60s. They're, in semi-retirement phase, and they're riding off, doing their weekends and going dancing and the rest of it. Eventually, in 10 years, 15 years, those people get older, those people die, the next people come around, and eventually these younger people, like my kids as an example, they'll know Bitcoin as an asset to invest in. It's a no-brainer. Everyone will invest in Bitcoin. And that's where I think what a lot of people aren't seeing is that a lot of this population that will start growing up with Bitcoin, just like our kids are growing up with iPhones and no iPad and understand them straight away, they're going to understand this topic because they're going to be educated in media, in the masses, in maybe not traditional school, but you know what I mean, right? Like those will die off, digital natives, and they're just going to go and increase the expenditure on this, which will then put more pressure on it.
Even like the older people though, they still will own it, especially if Microsoft does go through their superannuation funds. They just won't necessarily know about it.
Now that MicroStrategy's in the S&P top 1, they all own it now.
There you go.
Because they're all in index funds, and those index funds own MicroStrategy.
And then there's so much money sitting on the sidelines waiting for a company like Microsoft. MicroStrategy is the biggest investor, but they're not so well known. But you get a mainstream company like Microsoft that gives it the tick of approval, even if it's just a small amount of money being put in. That's going to release the floodgates, or potentially could release the floodgates, because there's so much money sitting there just waiting for that tick.
But I couldn't believe when you did that speech at the event, Adam, how many companies, right, are actually investing in Bitcoin. And not just company, you're talking about some of the biggest universities.
Harvard University, states.
And all you got to do is one Google search or one chat GPT search going, who are the biggest companies, right, in the world investing in Bitcoin? And it'll tell you exactly, and this is what I mean, it'll give you more and more.
And it's a finite supply.
Confidence.
What's interesting, a fun fact I found out for myself, is that I put in the top 50 Bitcoin holders, corporate Bitcoin holders in America, companies. You've got MicroStrategy, BlackRock, 50 companies. This is how early it is still. My personal holding would have me in the top 50 of the public companies in the US. That's how early it is.
That's how early it is.
Yeah, that's crazy, which is just bananas. So a couple of quick things before we move on. These guys I spoke to yesterday that onboard these high net worths around the world into only Bitcoin. There's no shitcoins, no Ethereum, no nothing. Their whole business is built and they operate on a Bitcoin standard. So their fees, they issue an invoice in Satoshis, in Bitcoin. Right, you got to pay them in Bitcoin, and they only accept payment in Bitcoin, and they only issue invoices in Bitcoin. So they can trade globally in Bitcoin. They manage. They do a corporate treasury service, and we're going to have them on the pod soon. And they charge their management fee on a percentage, just like, when you give your money to a money manager, it's quite like a VC, they'll charge you 2 and 20. So 2% management fee, and then 20% the upside and none of the downside. That's how money managers work, right? These guys charge 1% of the value of what you own. But what's interesting is it's indexed because Bitcoin's CAGRing at 55%. So their fee is CAGRing at 55%, and it's only accepted in Bitcoin. Very, very interesting. And I was like, so seriously, I'm going to get an invoice from you as an Australian business that does not have Australian dollars on it. They're like, no, it's going to be Satoshi based, and you pay us into our wallet. They don't have a bank account. I'm like, what the fuck? Like, how unbelievably exciting, right? Next level way of thinking. And they are literally not just saving in Bitcoin, they're only transacting in Bitcoin. It's just amazing. And the other chart that I thought, for young people, I look at, it's James, is it, the videographer? Yeah, James sitting here. There's a chart that I would show young people, which was that 10 years ago, I think it was 650 Bitcoin to buy a house in Brisbane. 5 years ago, it's 60 Bitcoin to buy a house in Brisbane. And this is including the increase in price. Today, it's 7 Bitcoin. So when 667. So another 5 years, how many Bitcoin is it going to take to buy a house in Brisbane? And you can buy a Bitcoin today for $100,000 Australian. Think about that for a second, what I just said, right? If that trend continues. Now, I'm not saying that's what's going to happen because I'm not a financial advisor. I don't have a crystal ball. But this shows you that what I've learned from really going deep on Bitcoin, I've learned more about money and how my own psychology about money has been programmed by the system to understand. Now I deeply understand inflation. I deeply understand debasement of our currency through printing, but it's only because I've gotten deeper and deeper and deeper into that rabbit hole. And now I start to see the world through a very, very different set of eyes. And when you start denominating almost anything against Bitcoin, nothing competes.
This is really important as well, because a lot of people are going to listen to this and go, awesome, sounds great. And then we're going to put it in the too hard bucket. And this is where that idea of education and creating time blocking, which you talk about all the, ironically enough, time, is creating the time and energy and space to learn about these things, because there is a golden opportunity right now, whether it's Bitcoin, real estate in other countries, to make a bunch of money. And every year that we don't have our foot in the door and every year we don't pull the trigger on that, it gets harder and harder to get in because the world is leaving you behind. I was talking to my mentor about investing in it, and I said, I want to wait for the dip. I'll buy the dip. And his response was, what are you fucking talking about? If you buy at 69K or 72K or 62K, it means nothing when it's worth $1 million. So just get your foot in the door, which I can see that perspective as well. So if you are listening to this and going, yeah, but Bitcoin, it's complicated or this or that, start learning about it. There's so much content out there, so much education. This is the first step, us talking about it. The next step is do something about it.
And even if you say you got 50 grand to put in, or you got 100 grand to put in, or you got $1,000 to put in, instead of maybe putting it all in, right? Do a dollar cost average scenario and just go, you know what? I'm going to put in 5% today, 5% in 3 days, 5%, and just ride that wave. You know, like if that makes you feel comfortable, because there's a lot of people that do that as well, rather than going, I just went bang the next day, the fucking thing kept just going down for a long time, right? And I just held. But if I did that strategy, I'd be a lot richer in Bitcoin today.
That being said, just for context, for those of you who know nothing, if you look at it historically, we are sort of at a base now, ready for a fairly solid bull run. If the market's right, I'd hate you to wait 6 months, these 6 months. The last 3 years, it's been through winter, and we're just coming into, that's a short way of saying it is kind of an opportune moment, not to do it all at once, but I do agree, do it over a week, 2 weeks.
It's a strategy, right? Like it's not financial advice, but it's just a strategy.
Yeah, totally. But don't spread it out over 2 years. Over like 2 months, just ease in a little bit. Chris, you were going to say something.
Yeah, I was going to say like as well, like just the balance between all these opportunities and the focus though, right? Because I think it could be leading into the topic. So how do you decide what you're going to go into? How do you decide what you're going to ignore temporarily? I think that'd be an interesting conversation so people don't get like analysis paralysis. It's like, wow, there's, could do property overseas, could do the Bitcoin, could do business, could do all these bits and pieces. How do we decide those things?
It all works.
It does.
All works. It's risk versus reward, right? So how much do you understand something? And then what's your risk profile? So for me, I'm relatively young. I'm willing to lose a little bit to gain quite a lot. It depends on if you have children. It depends on what your business is currently doing. But I think the first step before you go, there's too many things, is start exploring each one. So if you take those 100 hours and you put 10 into one topic, 10 hours learning about one thing is a lot of time. Like most people won't dedicate 10 hours to anything. So then 10 hours into the first topic, cool, I understand it a bit better. I don't really think it's for me, or maybe I should explore it more. Then 10 hours into the next topic. But I think a lot of people will use that paralysis analysis, which is a real thing, as an excuse not to even start. It's a very valid point, but just start putting in that time and all of it works.
Yeah.
What works best for you and your family and your business?
I think learn before you earn. So if you're sitting there right now and you've got nothing going on, then it's different. But Chris, you've got like an AI business that's consuming all of your time and attention, right? And right now you have commitments to yourself, to your employees, to your stakeholders, all of that stuff. So for me, like, I do an hour or two a day of learning because I actually enjoy it. It's kind of therapy for me more than anything. But if you're in that position, if you find it therapeutic to learn about like property in Dubai, or you'll know, as Tony said, after 10 or 20 hours of just listening to YouTube videos, what draws you. Like I watch Eric, and when anything property, he's like leaning in, like it lights Eric up. He loves that. I love Bitcoin. It's just a fascinating subject to me. It's got so many aspects to the story that just has captured me. Different people but traders, I've got a mate who's a trader. I gave him 20 grand last week. He turned it into 50 grand in a day. And I've said, shit, I got to learn this. I did one 1 hour call with me. I wanted to shoot myself. I was like, fuck, I can.
One we did with your mate Ash, remember? Oh, Adam's like, bro, I got a mate. He's trading. This is what he does full time. He's gonna teach us. And we sat there, and I literally lied. I literally lied at the end of the call because I didn't want to look like an idiot because I wasn't sure what Adam was thinking. And he's like, so what do you guys think? Is it? I'm like, yeah, I kind of understand it. I'm like, I have no fucking idea what just happened. And Adam's like, I got no fucking idea. I'm like, okay, and neither did I.
Like this guy makes 2-3% a day arbitraging crypto across multiple exchanges, and he kills it.
It's too complicated for most.
And I would shoot myself in the face. I could not do it.
Well, the other thing too, though, is to your point. Yes, for me, I've got to remain very focused, but it's also the network, right? So being surrounded by people who know these certain areas, like that Eric, you said it earlier, you can draw on Adam's knowledge and experience around crypto. So I think that's also really important. It's like, stay focused on, well, in my case anyway, I need to definitely stay focused on this part here. But there's nothing stopping me from leveraging your knowledge and experience, your knowledge and experience, your knowledge.
And you can spending an hour just while you're in the sauna or at the gym listening to something that captures you. You'll know, like when I listen to anything Bitcoin, I'm addicted. I just can't, I love it. And I watch the Bali development stuff and I semi-love it. Right. But I know there's people crushing it. And what we're trying to do here at Unemployable is give you a platter, guys, of like, here's some threads to pull on, like to try these different little things here and see which ones resonate with you most.
Yeah, just one point on this as well, because this is relevant to the pod you did where you shared your personal story. We're buying our 8th property now, and I don't say that to brag. It's because I've built this thing for my daughter and my wife because I could die tomorrow. And I think about that every day. And my business is doing okay. It's doing pretty well, but that could end tomorrow. I'm in coaching, I'm in education. We could have a disaster or something. So about 7 years ago, when I started my investing journey, I lent on people like Adam and Eric, just different mentors. And I decided to build a moat for myself personally that was outside of my business. So a lot of people listening right now, and I know you as well, you're in the building phase and your business is probably going to be the greatest return out of anything, to be honest. However, that doesn't stop you from building a moat. There are a lot of investments out there. It's not that complicated to buy some Bitcoin. Take 10%, not financial advice, and put it into that or into property or something else. Build that moat for yourself because a lot of people go all in on business and then something happens and they could lose it all.
Yeah, I think that's absolutely great advice. I heard recently as well, like they say, burn the boats, but like they say, like you should still have a dinghy somewhere around the corner.
Yeah. One of the questions you ask is like, what do you do, right? Like, do you buy property? Do you buy this? Do you start a business? The key is do something.
Yeah.
That is the key, is to take action and do something.
You've chosen business right now, and that has a CAGR of, you did $700,000 in sales in the first 6 months from like none of your own money in, right, with no ads. That's a CAGR like a motherfucker.
and that's a business that really is a brand new business. It's not like you're modeling the business off a business that's already been done. It's a brand new AI
If you can
agency.
actually get it to profitability, which will be the next step, right? And you can get it to $500,000 profit next year, for example. That business might be worth $1.52 million that you started from like 2 sticks in the forest. So it's just a very, very high risk venture that psychotic entrepreneurs go down that path.
Yeah, absolutely. And that's the thing as well, like is, maybe it's the right thing, maybe it's the wrong thing, but like even just taking that, year, 2, 3 years of building that then allows, okay, now big lump sum amounts to come through into Bitcoin, into real estate, into other areas as well, So,
where it's a problem is if you've got $500,000 in cash just sitting there doing nothing right now. That's where you need to dive headlong into something to get that money working, whether it's Bali, property, or Bitcoin. Just don't leave cash sitting around doing nothing when all that's stopping you is some education.
But it's all based around experience, right? Like, I love property, right? I don't love the phone calls. Adam loves Bitcoin because he's had experience with property and he doesn't like the phone calls. He doesn't get a phone call about Bitcoin, right? He's just got to tap into his emotional intelligence and ride the wave, right? I'm getting phone calls going, what about this? And what about that? And I have it managed, but there's still fucking shit that you deal with, right?
The number of times I've been with Eric and he's going, I just look at his face. I'm like, this. I don't know. Somebody's taking a shit in the sink or something.
Oh shit! The oven's on the oven tray's on a bit of an angle, and my muffins aren't being cooked properly.
You literally got that complaint. Somebody complained because the fucking muffin trays were too close to the grill.
I'm like, fuck you and your muffins.
I'm like, here he is driving around his G-Wagon. Everyone thinks he's fucking living it. And he's like, gets a phone call from fucking Sally who's burned her muffin top. And I'm just
Every
like,
time I go to 7-Eleven and I see that poppy seed muffin, I'm like, fuck you.
I'll take the volatility, bro. You keep your fucking properties and all the people shitting in a sink. Like, we've had people in one of our properties. I'm not kidding. One of our properties, we literally had a dude taking a shit in the showers and just pushing it. Like, we've had people, I can't even tell you, it's disgusting. Some of the stuff at one of our properties, you could write a book about it, you know. It's like, honestly, we had a meth lab. We've had the whole lot.
Maybe he was the guy you gave Bitcoin advice to.
Honestly. Anyway, so guys, on that note, we were going to cover one more subject, but we'll leave it at that because we've come up to the hour. We want to honor your time. There's a lot we could talk about. We'll get to it next week. Just a last minute reminder, go to earlybird.ai/webinar to join us next Wednesday night for this awesome webinar. I'm going to be hosting it actually. Chris will be there as well, but I'm going to host it because I really want to talk about it not through the lens of an AI guy, through the lens of a business guy, and how to use it to create profit, because that's what I'm all about here, guys, is long, slow, romantic walks to the bank. That's what I care about. For all of you guys out there in business, you are taking on enormous risk. The only reason you would do that is for your family and the people you care about, and that's why we're doing the webinars, to show you the brass tacks of why you need to pay attention to it. With that said, have a great weekend, great week next week, and we will see you guys next time on Unemployable. Bye for now.
Hey there, I hope you enjoyed that episode of Unemployable. If you'd like to watch another episode, just click there.